Hey, Kevin here, top 100 financial advisor and best-selling author, and we are here to talk about the stock market. Today should be a very big day for Rivian. Today is the day they're supposed to go public. This could be spaced out. Sometimes, IPO dates do move, but also the time that you're watching this may not be the time for you to just go in and just buy it right then. It may not be available yet. That's not your app's fault. This is generally how these things happen. I talked about this for like DoorDash and a lot of the other companies that went public last year. So do know that it might be 2 p.m., it might be 1 p.m., it could be noon before you're actually able to buy this company, assuming that it comes out today, which it's supposed to. But I want to give you a strategy breakdown of what they do, what you need to know about them, what are the risks, who is backing it, how this whole thing came to be, and whether or not it is a good idea to invest now, or is it a good idea to invest at all. Now, honestly, I wanted to do this a long time ago. By a long time ago, I mean sometime last week, but then we had an infrastructure bill that threw stuff off, got some other projects going on, so I didn't get to do the breakdown I wanted to do. But hey, better late than never, and hopefully you're watching this before the IPO. And even if you're not, it's still a good time to really take a look at it because you still may want to make that decision. A lot of times IPOs are risky. So I'm telling you that up front. And if it ain't in your risk tolerance, it might be something you want to sit out on. We know for a fact that a lot of times, a lot of these hot IPOs will just fizzle out, they drop, and then years later they can become a very big thing. So for example, I'll bring this up now, I'll put a screenshot somewhere, but you'll see that Tesla, we see what Tesla is now, $1,200 a share, whatever it is, and started out very, very cheap at $6. But notice though that it really didn't do anything until about 2019, and that's when it absolutely exploded, which means that if you bought it back in 2010 when they went public, you really didn't see a whole lot of growth up until 9 years later. So if Rivian is going to be the next Tesla, and that's a huge, huge if, then know that it might be a very long time. It could be a decade, it could be longer before it takes off in the way that you might expect. A lot of people are throwing out comparisons to Tesla all the time. Remember that you are comparing Tesla, what is it now, 11 years into it, to Rivian's first day, literally their first day in terms of the stock. Now, let's go ahead and jump into it. So we got Rivian. They were founded in 2009, so they've actually been around for a while. And they have not really made all that much money. In fact, they've been losing money quite a bit. Now, that is not something that is uncommon, especially in this type of industry. It is expensive and difficult to make cars, to put them out there, to meet safety guidelines, a whole bunch of other stuff. In fact, Tesla is just now, remember, they I think they reported their first annual profit last year, 10 years after the fact. So remember, it could be a while. So just now turning a profit. Tesla is, Rivian is not. They just delivered their first vehicles, I think in September of 2021. They're going to deliver their first batch of some more vehicles this December of 2021. So we're just now, since 2009 up until right about now, you're actually seeing those cars on the road, or at least you're supposed to be. Good things, well, I'll just kind of run down a few of the things I'm looking for. So first, remember, I talked about the banks a lot, and I talked about when companies go public that banks stand to make money. So you got JP Morgan, Goldman Sachs, Morgan Stanley, Bank of America, and others on there. So when I talked about retail bank and investment banks and having these different lines of business, that's for the banks. But let's go ahead and look at it. So the first thing that I look for, or one of the first things I look for in a company, is do they have that company stack? Do you have different benefits and revenue streams that you can really stack on top of each other? The technical term for this is vertical integration. They bring up vertical integration in their filings a lot, and they want to be a company that, from end to end, they want to be able to sell you the car, sell you some things and software on top of the car, and continue to keep you in their ecosystem, which I think is a smart move on their part. What I like about Rivian is that they are very clear in what their purpose is, in that they have their vehicle, they call it electric vehicle venture. So they want to be the company that has, think of it like the electric Jeep. People who have Jeeps, they love that off-roading stuff. They are a tight-knit group of people. There is a type of Jeep owner, just like there is a type of, let's say, Harley Davidson owner. So they're taking that and saying, for the electric part of this, this is where we want to be. So that is part one of their business. Part two of their business is their commercial fleet. Amazon is one of their biggest backers, as well as Ford, and Amazon is doing it because obviously they have a lot of deliveries that they need to meet, and they're using or supposed to use Rivian to do that. They signed a deal back in 2019 where Rivian is supposed to deliver 100,000 electric vans and vehicles for Amazon. That is the biggest push. That was the thing that put them on my radar. I'm like, oh, this is interesting. And now they're going public. I think Amazon owns like 20% or so. They own a big stake in this company, as well as Ford. Last I checked, I think they had like 12% of this company is owned by Ford. Interesting for Ford. We'll get into that in a few. So those are some of their biggest backers. This is a good thing for me. First off, I don't do many IPOs at all. I think I've only done one, and that was Snowflake, due to the risk. Rivian has my attention. The only reason I am even, heavy into thinking about Rivian is because of the SoFi deal. Told you guys the other day, the secret to getting Rivian at the best possible price for regular investors is through SoFi. SoFi is going to offer a certain amount of shares, I don't remember the exact amount, where you're able to buy at the IPO price, the price that the banks get and everybody else get. And by the time I get the, anybody who's on there gets that super good price. And then when it hits the public markets, when everybody else gets to it, y'all get whatever happens after that. And then the market takes off from there. So that's what I'm doing. That's the only reason I'm doing it. If I weren't getting that preferential price, which everybody can if you get the app, then I probably wouldn't be doing it. So just throwing it out there. All right, so you've got the two-sided market that are doing commercial and they're doing these really adventure vehicles. Now, momentum is something I'm looking for. What about Rivian is supposed to really push the company forward and supposed to be at the right time, right? So the good things here are, we know electric vehicles, that's the place. We know what's in the infrastructure building. They're building charging stations, and we know this is where people want to move. We know we're more climate centric. We know that this is something that is necessary to a degree and something that's trendy and is, I think, an increasing trend. It's not something that's just Tesla only. We've seen it with the electric Mustang. We've seen it with a bunch of other cars. There's a new Cadillac Lyric, I think, was totally electric. They looked really, really nice, but everybody is moving towards electric. So launching an electric vehicle company now could make some sense. Now, the other thing that they brought up, and I don't think I highlighted this earlier, is that 70% of new U.S. sales. Let me double check that. Let me see. Here we go. All right. So here's what we know. Trucks and SUVs comprise 70% of new vehicle sales in the United States, and account for most profits generated by incumbent manufacturers, automobile manufacturers. So it means, of all the revenue generated by car companies now, 70% of it is trucks and SUVs. That's where car companies make the most money. Rivian is saying, look, I'm not even going to do a car like Tesla does, and Tesla's trying to launch a truck, and that truck looks hideous, by the way. Rivian is saying, look, I'm going to go for what I know people want now. I'm going to only make trucks, basically. I'm going to only make trucks and SUVs. That's where people are, both commercially and for consumers, which makes a lot of sense. The other thing they say here is that e-commerce, which is what I really like. They have an e-commerce platform where, just like Carvana or CarMax or something like that, you can order the car online and it'll just appear at your home. They are doing that too, which I think is a pretty good move. So e-commerce has driven, and this is from their report, e-commerce growth has driven the dramatic increase in last mile parcel and food delivery. 2020 U.S. e-commerce sales grew 32%. We also know that consumers don't like going into dealerships and haggling and doing that whole process. This case was made very clear by Carvana and made clear by CarMax, where they don't even do haggling. You go pick the car, the price is the price, and you roll out with it. So they're not even going through the general dealership channel, which can be a little convoluted, where Ford has to sell to dealers. Dealers have to sell to you. You got to convince the dealer and trade in and all that kind of stuff. Rivion's not doing any of it. You want to order a car, you can get it online and keep it pushing like that, which I think, again, is pretty brilliant. Outside of that, outside of their e-commerce platform, which is good, then you've got, again, the consumer end, then you got the commercial end, and then they have what's called the Rivian Cloud. I think that's where the good, or not the good, that's the most interesting potential on how they're going to use that data to improve their cars, help service. The good thing from the EV side of things, I'm sorry, the commercial side of things, is they're going to be able to manage your fleet digitally and say, look, you got flat tires here, these things need to be repaired, and you get to be, and even self-driving remotely as well was one thing that they mentioned. I don't know how far they are on that piece of technology, but very interesting, and I think endearing for what they are trying to do and what they're trying to build. So that is a little bit about the business, which, looking at it from a business perspective, that sets up quite nicely. I've got tech in my cloud. I've got two business sides of things I'm going to look for, except that there are a few concerns here that you might want to be aware of. So number one, right now, presently, they've got one customer. That's Amazon. That's it. That's it. They've got 100,000 vehicles that are supposed to be committed to Amazon. Amazon can pull out of this deal at any point in time. I don't imagine they would. They own 20% of the company. I don't know why you would move if that were Amazon, but that is still a risk. Until they start to put more cars out there and you start to get more companies buying their vehicles or more consumers buying their vehicles, you're a one-trick pony in terms of, selling to one person. And that's it. That's something that they are going to have to fix. They got time to do it. Again, they've been around since 2009. This is the first time really putting out cars. This is okay for now, but I really want to see them start to pick up more consumers and more customers before feeling safer about that. Another thing is, you still got Tesla in this space. Tesla is launching a truck. Now, how the branding is going to work and all that kind of stuff, that's up in the air. But also, Ford is launching an electric Ford F-150, which is one of the most popular cars ever, period. Yes, Ford does own a portion of Rivian. However, what happens when Toyota decides to do something like this? What happens if Mercedes-Benz, right, start to do something? I don't know Mercedes business as like that because I don't own a Mercedes. But how do they respond to this? Because they obviously, market is open now, they obviously sell they sell SUVs and things of that nature too. What if they just say, okay, well fine, I'll just make an electric one. Then what? These are things you want to be concerned about. And just because Tesla is out there and paving the way doesn't necessarily mean that you are going to be the next one. Remember, Nikola tried to be the next Tesla and the Tesla killer and the Tesla competitor. It didn't work all that well. It didn't work all that well at all. So it doesn't mean that just because Rivian is out there means that they're instantly going to be a competitor to them. They could be in time. Yes, there is more space for another Tesla competitor. If you got Pepsi and Coke, you got GM and Ford, then yes, Rivian could be Coca-Cola to Tesla's Pepsi. That is possible. It could be years away, but it is possible. So that's something that you do want to consider. Another concern, though, is supply chain. That's going to be an issue. What happens if they are not able to deliver the 100,000 trucks to Amazon? What happens if they're not able to meet consumer demands? Yes, this will fade at some point. However, the market doesn't always react the way that we expect it to. That's something you want to be aware of. And then lastly on the risk thing is it's valued at 37 times what Tesla was valued when Tesla went public in 2010. I'm not sure if that matches up. Like, really think about that. This is a new car company that is in the exact same, or similar rather, a very similar space, and is valued 37 times more than what the original company, Tesla, was valued at. I'm not sure if that makes sense. I know we understand electric vehicles more now than what we did. I know and understand that we're building infrastructure and really looking towards EVs. But 37 times is a lot. That is a whole lot for you to be valued at out the gate. Like immediately, boom, I'm worth 37 times what Tesla was when they went public. Should it be valued more? I can see that. I can see it, but 37 times more is a lot. That could easily come down. The stock could go public, sink right back down to where it should be, and then we'll see what happens after that. So do be aware of that. Let me see other notes here. Treasury backed by Amazon and Ford. I want to see more recurring revenue. I want to see some sort of. I'll take the Rivian Cloud. I want to see if they can make that into or better articulate how that's going to generate revenue for them moving forward. I haven't really seen that. They just kind of mentioned it. Here's what it is. Didn't really go into how it builds or how it makes the money in that sense. But when you give me e-commerce, you give me a two-sided business platform, commercial and consumers, and they're finding, or at least trying to find a niche to say, look, we're not Tesla where it's totally luxury and primarily cars. We're saying, look, we want to be the electric adventurer brand. We want to be Jeep, except really luxury and electric. That's kind of the market they're looking for, and it's still going to be in the luxury space. Now, you can have more than one luxury brand. You got Mercedes, you got Lexus, you got Acura. They're all luxury. So you can still do this, but it will be interesting how that plays out. There still leaves opportunity for a GM or even a Ford, because the person who drives a Ford F-150 is not the person that drives a G-Wagon. They're not the same, right? So this is a section of the market where it says we've got, I mean, it's really rich people. We're talking $60,000, $70,000 vehicles. So we're saying, look, we're going to cut the rich people market who can afford Teslas and say, look, you know, you got the Tesla cars and you got your adventurous people here. This is where we're going to play. Then Ford can play with their electric F-150 and GM can play with their GMCs or whatever GM makes. I don't own them. And that could be a space where these companies do exist. So for me right now, I see a path. I see a path where years from now, I don't expect this to be a quick turnaround. The hype could push it to be one, but I really don't see it a business case for this to be boom, it takes off like Zoom did in year one, right? I see this more like an Uber, which was awful that very first year. Now Uber is turning things around, but it's been a few years. You know, I'm going to do it. I'm only going to do it because I'm getting that preferential price. I told y'all how to do it. Y'all can do that. I don't think I have a link. Y'all say y'all have download on your own. If I do find a link, I'll put it in the comment section below. And I'm gonna tell you right now, I'm putting in $500 and I'm leaving it alone. And when I mean leaving it alone, like I'm getting it. I'm never opening the app again. Well, not never, but I'm getting it, and I'm really going to forget that it even exists. I'm not going to be checking the stock price every single day. Like, I'm going to lock it away and just totally forget about it. Very similar to what I did with Snowflake. I don't know whether Snowflake is profitable from a stock perspective or not, because I went into it from a long-term perspective. I don't expect anything from Snowflake. It is locked away, and I'm really not going to care about it and just leave it. Why am I doing that, and how am I doing that? I know that this is a long-term play. I know it's an IPO. What you don't want to do is sell an IPO that could be the next big thing, and you sold it after 2 years. Again, think Tesla. You had $1,000 worth of Tesla in 2010, where you would be today. You don't want to do that, right? So I'm gonna put it. I did my analysis. We talked about it here. I'm gonna get my little $500 and I'm gonna lock it away. I'm gonna forget it exists. And in 5 years, 10 years maybe, I'll come back and we'll see. If it loses, I lose $500. Okay. Do I want to use that $500 for other things? Could it be a PS5? Yeah, it could be. But hey, right? that is the risk we are taking here. So not a huge position for me, because I don't know. It could be great. It could not be great. It could go bankrupt. It could be Nikola. It could be anything. That is the chaos and beauty of an IPO. So those are things you need to know. Founded in 2009, backed by Amazon, backed by Ford. Look at my notes here. They are going for the EV market, which I think is smart. They've got the e-commerce platform, which I think is smart. This is the time to do it. If you're going to launch an EV company, this is the perfect time. Last thing I'll mention before we go is they have the other way to profit from this without directly being in it is, one, you could look into Ford. Okay, so if if this company does well, then Ford will also do well because they own a portion of it. So that's number one. But the other thing is you might want to look into manufacturers who create the products and services around EV. So maybe not the car company, but what are the suppliers? Who makes stuff that creates the batteries for these cars? Who makes the stuff that makes the chargers for these cars? That might be something you want to look into, so you don't have to take the risk on something like Rivian, but you can make the profit from something like Rivian and other EV vehicles. And I'll give you one company that was mentioned, if I can find it. I have too many windows up. All right, let's see. All right, I can't find it right now. We'll probably do a separate video on it. Oh, here it is. All right, so the ticker symbol is ALB, Albemarle Corporation. Don't know how to pronounce that one. The best way is at $280 a share right now. It's up 148% in the last year. They are one of the companies, just one of them, that helps to facilitate this EV boom. So if you don't want to do Rivian itself, which is totally fair, you might want to look into ALB, and they might be able to help you to make some money now with a little more reliability. That's another interesting way to look at things, similar to what I told you guys about weed stocks. And it's like, I don't know if I want that company specifically, but what about, I don't know, the soil growers? What about, you know, the picks and shovels my friend Courtney always brings up that can help you to facilitate it? But if that doesn't go well, I'm still selling the picks and shovels. If Rivian doesn't do well, I'm still selling the things that go into batteries for Tesla and Ford and GM and Toyota and whoever else needs it. I'm gonna be all right. Whether your car works or not, that's none of my business. So ALB might be a company that will do a deep dive into, similar to this. All right, so that is it for me. I'm gonna try to get this out as soon as I possibly can. What I don't want to do is like the company goes public and then you're watching the video after the fact. So I want to try to get as ahead as I can at this point in time. All right, that is it for me. Let me know what you think about the video, and I'll talk to y'all later today. Got to do my 5 videos a week, and we're gonna keep on it. All right, talk to you guys later. Bye.